Hi, I'm Ken Hagner, founder of Circle 8 Ledger. This is Leja, a payment orchestration platform built for global trade, starting with some of its most underserved corridors. What you're about to see is the vision for where we're headed. Before we go deep, here's the whole picture in brief. SMEs and corporates face retroactive exchange control penalties on legitimate trade payments. This is real, and it happens at every scale. It happens because legacy rails move value, not context. And the infrastructure serving these corridors hasn't caught up to the standards that fix this. Leja's answer is 3 mechanisms working together. ISO 20022 messaging, tranche-based settlement, and blockchain settlement. So every transaction is self-documenting by design. The payoff. When the bank calls, the answer already exists. We're starting in 3 underserved corridors: India to Nigeria, Kenya, and the UAE. But this is built for global trade. And for SMEs and multinational corporates alike. Let's walk through it. Here's the sting. An SME completes a legitimate cross-border trade payment. Business moves on, and months later, their bank or the regulator comes back asking them to explain that transaction. If they can't produce a clean answer, money gets deducted. In May 2026 alone, South Africa's Reserve Bank seized around 35 million rand from 7 private organizations in just 9 days. And it's not only small business. In 2024, SARB ordered the Steinhoff Group to forfeit over 6 billion, yes billion, rand, or ZAR. The largest forfeiture in its history. This risk sits on every scale of business trading across borders. So why does this happen? Part of the answer is the rails themselves. A cross-border payment usually hops through a chain of correspondent banks to get from your bank to the recipients. Each of those hops is built to move an amount, reliably, from one account to another. None of them were built to carry the reason why that money is moving. The rails move value. They don't move meaning. No explanations. Part 2 of why this happens. And where the fix already exists. ISO 20022 is the industry's emerging global standard for payment messaging. Instead of a bare amount and reference, it carries structured, richer data with the payment itself. Purpose codes, invoice references, verified counterparty details. The fix already exists at the standards level. The gap is who's actually building on it for corridors like these. The first mechanism Leja builds into its core is tranches. Trade payments don't have to be a single leap of faith. Documentary collection structures. DP, documents against payment. And DA, documents against acceptance. Release funds in stages. Tied to verified trade documents like bills of lading or invoices. The proof of why the money moved isn't paperwork you scramble to find later. It's the very mechanism that released the money in the first place. The second mechanism is the settlement layer itself. Blockchain. Specifically stellar-based settlement in Leja's case. Kept deliberately simple, because it's one tool in the stack, not the headline. It gives us 2 practical things. Payments can settle fast across borders. And the record of what happened is written in a form that can't be edited or deleted later. This is the payoff. Same SME. Same transaction. A different ending. Before Leja, the payment goes out. The context lives in an email if it lives anywhere at all. And months later a compliance request lands with no warning. Ending in a penalty. After Leja, ISO 20022 data travels with the payment automatically. Funds release in verified tranches tied to trade documents. And when the bank calls, the answer is already sitting in the record. No scrambling, no penalty. So where do we start? Leja's architecture isn't specific to any one trade lane. It's built for global trade. But we're proving the model first. In 3 corridors where the need is most acute and least served. India to Nigeria, India to Kenya, and India to the UAE. The destination is global. These corridors are the beachhead, not the ceiling. This architecture scales. Every counterparty is screened against sanctions lists before funds move. Automated fragmentation monitoring watches for structuring patterns across daily, weekly, and monthly windows. And the ledger is append only. Nothing can be quietly edited or deleted. That's true whether you're an SME raising your first letter of credit, or a multinational corporate moving billions across borders. The roadmap is staged deliberately, each phase unlocking new capability. Phase 0 gets the foundational rails live. Phase 1 brings full corridor coverage with tranche-based settlement for both SME and enterprise clients. Phase 2 opens self-service onboarding at scale. And Phase 3 looks further out, extending trade finance liquidity through real-world asset tokenization. This builds on learnings from an early prototype, Easy Remit. A quick word on why I'm the one building this. I've spent over 16 years in solutions architecture. And I bring an agricultural economics background that actually grounds the trade corridor thesis. I understand how physical goods and money move together. Not just the payments layer in isolation. I've also worked as a fractional CTO for established businesses. And I'm building Leja's full architecture bootstrapped, hands-on, and documented. From first principles. Leja is built for trade payments that never come back to haunt the businesses making them. Whether that's an SME or a multinational corporate. I'm building this in the open, and I'd love to hear from you.